Hey, my name's James Nicholson and welcome to this channel. This channel is all about my investment journey and we're sharing along the way all the good, the bad and the ugly. But not only that, we're currently building a property portfolio for my two daughters. We've got Georgia, who is 21. We've just bought our first property up in Doncaster. We're completing on our second property in the south of England at the moment. More details will come on that one once we're able to share with you. And my daughter, or my baby, Amelie, we're building a portfolio for her. Now, I want you to join us on this journey, find out the good, the bad and the ugly, see what's going on. You can check all of our deals out on our YouTube channel as we do them, including our latest renovation project. So how do you join us on a journey? You take that finger of power, you spin it round, you smash that subscribe button over there and you hit the bell notification. Come on, do that right now. And while you're there, give us a quick like on the video as well. That really helps with YouTube. Now, I want to talk to you today about the market, right? Is the market going to crash? Now, I'm speaking to lots of people who believe that they're experts in property. Everyone's got an opinion on it, right? Maybe that's your partner, maybe that's you, maybe that's your friends or family. Everyone's got an opinion on what is going to happen in the market. Now, lots of stuff are making it less affordable for people to rent from you or people that want to buy a house. We've got inflation at 10% and it's still rising, maybe even gets to 11% by the end of the year. Now, that means that people have less money in their pocket. They're paying more for their fuel, for their food, bills are going up and through the roof. So, of course, affordability is lowered. Now, that is going to have an impact on the property market. Like, there's no two ways about it, right? I can't dress that up and say that it's going to be all good because, look, it's not. Like, that is going to have affordability issues. Now, does that mean the market's going to crash? I don't think so. I do believe that it's going to cool off for sure, and I can't predict if there's going to be a crash in the future. You can't predict, even the analysts can't, because if they could, we'd all have crystal balls and we'd all go and buy a winning lottery ticket this weekend. No one knows for sure, right? But here's what I think that's going to play out for the rest of 2022. Now, Bank of England are going to keep rising in the interest rates, right? And so we're probably going to see, we've got how many months left? 6 months. We're probably going to see like at least 4 further interest rate rises. Now, the only reason that would stop is if inflation starts coming down. If the war ended in Russia or suddenly they overproduce oil and the cost comes down significantly, then those rate increases might slow down. Now, I don't think they're going to be huge rate increases. I think we'll keep it at 0.25% each time. And the reason for that is the person that's got the most debt in this country is the government. They printed so much money to lend people bounce back loans, recovery loans, furlough schemes. All of these things were very important to keep the country going. But now they've got to pay that money back. They owe trillions and trillions and trillions. So if the Bank of England jacks the rates up significantly, then the government can't afford to pay their debt back and then they'll default. And that's the last thing that they want to happen. So they're going to raise the interest rates slowly. Now, interest rates going up means mortgage costs go up as well. So that invariably means that people might spend less on buying a house. And that's where I think that the market is going to slow down. Now, the key fundamentals that mean that the market, I believe, won't crash is I'm doing deals currently in the southeast and I'm doing deals up north, and all of the agents still don't have enough stock. They've got plenty of buyers, people that want to buy property, but they're not getting enough stock on the market. So that means that people are waiting and seeing, right? And so that means that they're currently sitting there, they're thinking, should I sell now or should I wait and sell? They're reluctant to move because maybe the next step for them is to go to a bigger house and they're hoping that the market goes down a little. And so there's not lots of new stock coming onto the market. And when that happens, then the market won't drop. When you're going to see a crash or a drop in prices is when lots of people sell quite quickly and they're looking to take lower offers and stuff like that. So when the market starts getting busier, as in more stock comes on the market, that means the investors or or buyers or first-time buyers have got more options, and so they can be more picky. So interest rates are going to carry on rising. That's a given. So that means that you're not going to see big rises in house prices for sure over the next few years. However, that, as I'm saying, there isn't lots of stock on the market. So you are still getting multiple offers on each property. And that will continue for the rest of the year. It takes a few months for prices to start slowing down and then to start falling. It doesn't just be like July will be the best month and then August, suddenly the prices are down 15%, because the interest rates aren't going to change that quickly and the market's not going to change that quickly. It will be a slow process of slowing down and then potentially it will drop a little bit. So I don't think the prices are going to drop massively in 2022. I don't know what's going to happen in 2023. It might start dropping that year and you can't tell either way. However, if you check out some of my recent videos, I go into detail about, regardless of whether the prices go up or down or sideways, who knows what they're going to happen. I still think now's a good time to buy, because if you bought a house at 100 grand and you got it on an interest rate that's available today, rather than waiting for a property to drop to 75 grand in a year from now when the rates are higher, your monthly payments on that mortgage could be cheaper by buying that property at £100,000 than buying it at 75,000. And as investors, what we're looking to do is to buy into properties and add value to that property. So we're looking to look what value we can add to the property to release money back out and not leave lots in the deal anyway. And when you can do that, is not really a big concern. Now, those strategies that might be a little more difficult in this kind of market are where you're trying to flip a house, right? So if you buy a house, you're renovating it, and your sole purpose and goal is to put it on the market and flip it, that could be tougher. I'm not saying it won't work. Tons of people will still be doing that in this market, whatever happens in the next 2 years. But what I do say is that it will get harder to do that, because look, if you buy a house at 100 grand and then you do it up, and then at the end of that prices have dropped by 5%, you've lost some of your margin in that deal there, and the rates are going to be higher for the new person to buy, so their affordability is not quite there. Whereas in investors that buy and hold, which is what I want people to do, and I suggest that you buy property and you hold it, so then you build the capital appreciation. Yeah, next year the market might drop. In the past 2 crashes, it's dropped on average 15%, but then in the next 2-3 years after that, it corrects quite quickly as well. So if you're buying and holding, it shouldn't be massively a big issue for you guys, because you guys will still have that equity that builds up in 5 years, for example. So I think on a 5-year to 6-year period, you'll still be up, and you'll have made cash flow from the investment that you bought. You'll have rent that will come in. And so I still think that's a very good investment, and the interest rates are still considerably cheaper than I believe they will be in 2023. So I think now's a very good time to still get some deals. And even if the market crashes, then you'll be buying cheap. So it's all good anyway. So property investment is all about just finding good deals. It shouldn't be a real problem what's happening in the market. You should be focused on each individual deal and the merits on that deal. So look, I hope you find these videos interesting. We've made a Facebook group, which I'd love you to join. I'll put a link in the description to that here. Questions, post them here, or comments or observations. I'd love to hear your thoughts on that. And do give that little subscribe button a hit. And if you didn't earlier, like this video. That helps me greatly with the YouTube algorithm. I'm James. That's my beliefs. That I don't think the market's going to drop in 2022. But I don't know what's going to happen next year. But I do think buying the right deal makes it all irrelevant anyway. So that's it. I'd love to know your thoughts. And go and check out this video here.